Let's move on now and talk about Sona BLW, which is the next management on the show. The company reported a very strong growth in revenues led by the battery electric vehicle segment, which has been a rage globally. In fact, the share of sales to battery EVs in revenues hit a new high of 33%. Vivek Vikram Singh, the MD and Group CEO at Sona Comstar, joins us now to talk about that. Mr. Singh, good morning and thanks a lot for joining in. You know, this whole segment, right, the BEV segment has seen a very strong growth. It's seen a 53% top-line growth year-on-year in this quarter. But tell us, is this a sustainable performance? I mean, is this something that you can expect through the course of FY25?
Good morning. I think you ask me this question every time I come here. We've sustained above 25% CAGR for the last 25 years. So it shouldn't change much. Of course, you know, there are hiccups in some quarters, in some years, but over the medium to long term, we will have a strong growth rate.
Mr. Singh, good morning. Prashant here. You know, I was reading a report and I like how it started with outlook cautious for the industry growth, but positive for the company.
I know, Prashant.
That's right. And that's I mean, of course, that's new programs, products, customers, right? So tell us a little bit. I mean, how is the interplay between how cautious is the industry? I mean, I think you've also characterizing it as such, both in EU and I think in the US as well, and your own prospects.
So, you know, Prashant, I became CEO July 2019. I have never seen a good industry cycle in our industry. It's always been something bad. So basically what we've started to do is you budget for zero growth in the industry, and whatever you do has to be from your own efforts, which means you increase market share in products you already have, you introduce new products, you enter new markets. That's basically been our strength. Market for automotive in general has not been good for the last 5 years. That is a fact. It has been one thing after the other. I think in 2018, 96 million light vehicles were sold in the world. We have not crossed 90 for a while now. So it is a tough business to be in. You get better by doing the right things, making today better every day. And it is challenging, but it is also an opportunity for people like us who are truly different. We've introduced a lot of new products over the last 4 or 5 years, almost 10. That's how you get there. So, yeah, industry outlook continues to be challenging and we continue to do well. That's the theme.
If you can give us some numbers, you know, your share of sales to battery EVs hit a new high of 33% this time. I want to understand that how much higher do you think it can go? And with the share going up, does this mean that you can take your margins higher as well? I mean, you've done 28%. Is there scope to improve it further?
Yeah, so it will go higher. If you look at our order book, 79% of that constitutes EV. So it will go higher. Our near-term target for, I think, FY26 is 45%. Over the long term, I mean, let's say just 2030, it will be 65% plus. The future is EV, and that's where it's heading. The margin bit, Sonia, we don't have a desire to increase margins much further. The job of our management team is to ensure we have a good balance between growth, margin, and returns. When you focus on any one of these metrics, you tend to lose out on the other two. So our range always has been 25 to 27% is the range we like to be in EBITDA. We are slightly above that. Because of that, we've increased our R&D expenditure quite a bit this year. We will be trying some more new innovative things, some more risk-taking so that we can make tomorrow even better. So that's our approach. I don't think we're looking to increase margins more.
Okay, all right. Hi, Vivek. Good morning and good to see you. When, you know, the other factors you have approved raising some equity, I think more than 2,000 crores approximately. And there's a possibility you're looking at inorganic growth. Could you give us some timelines, the size of the potential acquisition, which geography are you looking at currently? Some brief details on that front.
Sure. So, yes, we are looking to raise equity. We have an enabling resolution, actually. We may raise equity if we need to. We are looking at quite a few opportunities, and they are all over the world. It's not one. We don't know which one will happen, which one will not, because, in a deal scenario, you either get it done or you don't. It's a binary situation, so probability doesn't matter. We have said, basically what we did is we took all the organic growth efforts, the capex required for them. We're looking at some more greenfield new product stuff. We're looking at some inorganic. All of that, what's the cash flow required if we had to do everything minus what we are generating and what we already have in our bank account? There is an amount, and when we applied the equity to debt ratio we will raise some debt. This is the number that we came to, but this is the maximum number. So the resolution is an enabling resolution that allows us to raise up to 2,400 crore. We will see where it goes, which opportunities progress more. It's everywhere, but the only thing I can assure you is they're all within our vision. We are a mobility technology company. We are not going to do everything everywhere all at once. We are going to stick to what we know well, and we will be in that space. We are not going to suddenly do random things. Our moat is in manufacturing of mobility technology products. That's where we're going to stay.
Absolutely. By the way, we are talking to another, almost mobility company, but from the technology side after you, KPIT. But that's in a bit. I have one question. So there is US elections later, right, Vikram? And so polls are putting Mr. Trump ahead. He's one of the first things he said. So one of the things he said, which he will do immediately, is do matching tariffs. So for example, if India's 100% import duties, he says, I'm just give an example. He'll match the tariffs, tariff by tariff, product by product. That's essentially what we don't know if it'll happen or not, but it's the stated objectives. And he loves tariffs, right? How are things for the sector? I mean, is the industry and the products, etc., you in at risk at all?
So not much. Our products don't have that much tariff. It's actually cars that have a lot of traffic. So if you're importing fully built vehicles, that's where the tariffs come. Auto parts, the tariffs not that high. But we have seen 4 years of Mr. Trump, or President Trump. I think there is a large gap in what is said and what is actually enacted in policy. And also, looking at how crazy American politics have got, let somebody win first. Then we'll see. We have North American presence ourselves. We have a plant in the US. We have 2 plants in Mexico. So our footprint is, designed for these kind of turbulences that keep coming. Yeah. But tariffs, Prashant, everybody loves them these days.
Yeah. No. Him more than anyone else. I think 30 years has gone on about tariffs. So, and that Mexico bid also, he's addressed that. He said, well, this indirect routing of stuff into the US, he's got an eye up. So we'll see, right? As you said, let someone win first, given the state of politics there. It's a pleasure, Vikram. Great having you with us. Appreciate your time here on CNBC TV18. Thank you very much. And fantastic job there, as always.